Isn't it wild how I can just call out every single bottom and every single top for the past, I don't know, month and a half, but no other YouTuber can do that? I don't even use like crazy indicators that some people go out there and buy, even though they're mostly moving averages, or just read just weird articles like Ron or Ricky, oh my gosh, guys, Google did this today. No, Google did that today because the market went up and they needed an excuse to why Google pumped. Now, there's a couple things I do want to go over this video. I did call out 615 and it hit on point. So great job if you've been following along. We're still in a bullish or in a bear channel, so just be very careful with that. There is a high rejection zone. We could hit 588 next week. If that does happen, what you could see this coming week, you could see something like this in the triple Qs where it does reject off this 20 moving average, and then it does come back up to hit that 10, and then actually goes down to around 543 on the triple Qs. But King, why would we drop like that? Well, I'm trading the trend, Jimmy. So this is how we do it. If you don't understand the moving averages, it's really not that hard. The 10 moving average and the 20 moving average can tell you the direction and where you are in the market. Right now, in every single Mega 7, mostly besides 3, which is AVGO, Google, and Apple, we're in a bear channel or a trend, whatever you want to call it. Right now, the bears are winning. We are rejecting countless times off this 10 moving average. And then we actually pumped. I did call this out. I said, hey, we're getting probably a lot of volume low volume this week because it's Thanksgiving, and low volumes, usually pumps the market slowly, and that's what we did. But 588 to 615 slowly, guys, we're not in 2021 no more. We're in 2025 going into 2026. $20, $30, $50 drops, even $100 drops in the triple Qs are going to be the new normal now. I mean, even Powell has came out, last meeting, or I think it was like 2 months ago. I can't remember. He came out last meeting and says the new normal rate base set is going to be around 3.5% interest, or 3.5% on the Fed rates. That's most likely where we're going to stop and hold. Do I believe that? No, I really don't. But he did say that though, which kind of like surprised me, honestly. I mean, I get why, because the market's moving so fast, the economy is growing so fast that inflation is going to be more easily, not controlled than like 1990, because, how can I explain it? If you don't understand inflation, it's really easy. It's really honestly easy. People make it so much harder than it is if you don't understand inflation. Let me just go over it for 1 second so you can learn something. And let me actually delete this. This was somebody I was talking in Discord. And by the way, if you want to join the Discord, the link is in the description. If you want to come in and talk to me, I'll be in there all day. If you want to come in and talk to me and ask about a stock, I'd be more happy to help you. I got nothing going on. But inflation is pretty easy. If you don't understand inflation, let me just pull up the is it micro map? Yeah, I thought it was MicroStrategy for a second. So inflation, it's pretty easy to understand. As the market goes up, which, this is what happened last time, 2019, 2020, the market was pumping really hard. That means it makes inflation pump when there's no rates. The only reason why inflation is being held down right now is because we have high rates. So when we start cutting rates and the market is pumping, which it's been doing that for 2.5 years, that means inflation is going to start popping off very soon. That's going to happen. I know it's crazy to sound, even though Trump says the economy is doing good, nobody's really looking in the background. Like, really, when we start cutting these rates, we're going to start getting CPI. A lot of reports are going to come in bad soon. Unemployment rate's going to spike, everything. So just be very careful. There is a couple things I do want to talk about, and that's especially the 3 stocks that are pumping this market, not pumping into new highs. I'm just saying the pump that we got for this entire week, even though it's a short week, this whole entire pump in the triple Qs really came from three stocks. I mean, there was like a couple others, like, Microsoft and Meta, they did pump a little bit, but either way, they were just following the other stocks. But let's actually go over this really quick. So I'm going to go over the comments in my last video because I think there's a couple of good ones and a couple of dumb ones. So I'm going to kind of go over that in a second. So if you do want to leave a comment for my next video, I will start going over my comments just to educate you guys. You know, that's my job as a YouTuber, because no other YouTuber goes over their comments. They just sit there, ignore them, and say, huh, I got my views, I got my paycheck. I don't care. I do this for free. That's why you don't watch advertisements. So leave me a like. That helps me out a ton. Now, let's go over this really quick because we do have a busy week coming up, and this is going to start making more violent moves. I do want to point out this really quick, though, because we are in a start of a bear market. I know a lot of people are saying that we aren't. Guys, you're crazy. We went from 400 to 630 in the triple Qs. If you don't think a simple back test to around 545 or 550, which is still in the bullish channel, which Biden had, is crazy. So I'm not saying a bear market to 400, even though we'll probably go to 445 or 475 very soon. But still, that's not a lot. Like, if we drop to 550, we can drop to 475 easy. That's only $75. So let's actually go over this. So if you actually look at this really quick, the last bear market in 2022 is really, honestly, easy to understand. It's really easy. It's just an inverse bull channel. If you want to, for the bulls, because I know there's a lot more bulls out there, because you get your dopamine high off these 2.5 years bull markets. And, you know, even though the bear markets only last for like 6 months, because, yeah, that's just how it works. So let's actually start off with this. Let's actually take off the 50, the 100, and the 200. So it's easier on the eyes and it doesn't look like a circus. So in a bullish channel, let's just start right here. So in a bullish channel, when you do have, you know, lows coming in and you do have the 10 crossing over the 20 moving average, usually in a bullish channel or trend, whichever you want to call it, you will most likely reject off the 10 moving average as supports. It's kind of weird how, you know, you go on there and you buy these indicators and they tell you to buy and sell. That's just because it's telling you to buy on the 10 moving average. It's pretty basic knowledge. A lot of you traders don't know this. But there is sometimes where you do drop down to the 20 moving average. That is common. That is super common. Right here, you know, you can go back and look at it yourself either way. But in a bullish channel or trend, you will most likely reject off the 10 moving average and you will keep riding that. Now, in a bear trend, you will actually flip that upside down. You will reject off the 10 most likely every time. Sometimes you go to the 20 moving average. So let's actually jump to today, present day. We are right here. We have crossed under into a bear trend. So right here, as we reject off the 10, we push to the 20 moving average. So this is going to be a high rejection zone for this next week. Now, until I start to see a cross in between the 20 and the 10, don't get your hopes up for a bullish trend. That is crazy. I know there's a super common mistake where when you do see the cross, people go all the way in. Wait for the reaction, guys. I'm dead serious. I've learned this mistake a lot of times where I'm like, well, it's about to cross. I better go into a lot of puts. Don't do that. Not financial advice. So this next week, there is a high chance of a rejection. So if the triple Qs do reject, you will need to pay attention. Let's actually bring up just the 50 and 100. So if we actually do reject here, you need to pay attention to the 100 moving average. So if we actually do reject here off of the 20 moving average, we could most likely hit this 100 moving average. Now, if that happens, we will make a lower high or a higher high. And that could be a chance where it does have a lower high and it could pump up to the same old highs and trade sideways, or do a lower high from the old high, something like that, and then make its way back down to the triple Qs. So a lot of the next 2 weeks, 3 weeks is going to tell us a lot. Now, if that doesn't happen, then what you're going to most likely see is where it does reject off this 10 moving average and it does push it. It just goes ahead and push its way. Sorry, it's like 9 a.m. I actually got to sleep in. I'm off today, so. But yeah, there is a high chance of rejecting off this 10 moving average again. So just be very careful, guys. If that does happen, your next support is really going to be around 589, and if that breaks, your 200 moving average is going to come into play. So your 200 moving average, which is, let me explain this one more time, because I literally got one comment yesterday we're about to go over. It's pretty basic knowledge. We are still in the 2023 bull channel. See this 2023 bull channel? It is not hard to go down to 545. It is not hard. It is still in the bullish channel. We have done it multiple times, hit this support. So if you don't think 550, 545 is going to come into play, you probably should stop trading, honestly. Like, that's crazy talk. Like, it's not, we've been going in this channel for a while now. Now, there is some times that can give you hints on if we're going to break this channel, which we are already doing it, because a lot of people are breaking their 200 moving average, which that's a bear trend, like bear started the bear market. I remember clear as day last time in 2020, 2021, when a lot of the Mega 7 started breaking their 200 moving average. When you start getting a lot of the Mega 7 breaking their 200 moving average, just like let's go over, Microsoft already sitting at its 200 moving average. Not going to be hard to break this very soon. Let's see, NVDA this week broke its 100 moving average, going down to its 200 moving average. Let's actually see, Tesla didn't do it yet. I think Amazon did. Amazon went down to its 200 moving average. Meta already broke its 200 moving average. Apple hasn't done that yet. We need to actually talk about that in a second. So what that's going to tell you is we're probably going to go down to this 200 moving average really soon. It's not hard. If a lot of the Mega 7 are pushing down to their 200 moving average, that means the market's getting weak. You have to remember, guys, Mega 7 is 52% of the market. If 52% of the market drop down to their 200 moving average, that means most likely every single stock is going to go down to the 200 moving average, and that is support of the 2023 bull channel. Not hard to do. So don't think it's not unrealistic, especially back here. It's not going to probably be this violent, but it's easy to drop. So what I'm saying is, if we actually do push down to the 200 moving average or the 100 moving average, you need to pay attention to these supports. So yeah, 588 on the triple Qs, and then 543 on the SP500. It did break above its 20 moving average, but that doesn't mean anything. Actually, I need to update that. Actually, I just need to delete that. It's too much to see. But the SP500 is the only index, which is just, a false breakout, most likely. In order to keep pushing in the market, you're going to need all the indexes. You're going to need all the Mega 7 to push past their 20 moving average. Just letting you know if you're a bull, which most likely isn't going to happen because we've rejected so much. But if we actually do reject here, your first support is really going to be around 6,592. And then when we start pushing down to around 545 in the triple Qs, you will see a 6,200. And then also on the NAS 100, what do you know, hitting the 200 moving average. Isn't that crazy? But if we actually do, your first support is going to be around 24,250-ish, something like that. And then in your 200 moving average, 22,379. And then also on SPY did have a little bit of push, but SPY is really not that big. It's mostly controlled by Apple. But SPY, your really main support is going to be around 655. But if the market starts to push down to 200 moving average, 613 is going to come in play. But let's actually go over this really quick, because I think we do need to point this out. So if you actually look at this, AVGO has done an incredible push. It's mostly with Google and Apple. Those are the only two last man standing. If these reject, so let's say if AVGO rejects from this high, because it's probably most likely doing a false breakout, just like right here, it does. Just because you break out of the channel a little bit doesn't mean anything. And rejects, goes down to all of these moving averages, finds support. let's say if Google does the exact same thing because it's really overextended, and if you're going to come in here and say Google is just a beast, it's not overextended. All right, Jimmy, this is 400 in the triple Qs. This is 630 in the triple Qs. It has not had a simple rejection yet, but everyone else is. So don't be surprised if this starts to reject down to the moving averages. So let's say if AVGO rejects to its moving averages. Let's say if Google rejects to its moving averages. And let's say Apple also just rejects down to its moving average of, the 50 moving average. If that happens, and then you also get a little bit of selling in the other Mega 7 because they're going to follow if we have red days coming in, it is definitely going to break this 100 moving average in the triple Qs and in other indexes. It's going to be super easy. It's only like $26, $27 in between this. That's not hard. Those 3 stocks alone is around $27 in the triple Qs. That's how much that those companies are worth. It's not going to be hard to break this 100 moving average. So if those big companies do reject, just say simply to their moving averages, you're going to be down here testing it again, and you need to pay attention around 588, because when we do break 588, that could be the next step of around 543. So just be very careful. Also, let's see what else. I'm going to go over the comments in a second. DXY is still fighting for its life. It has not crossed on the 20 and the 10 moving average. It is sitting above, or it was. Let's see, what is it now? It's not going to be hard to get it back above that 100 moving average. But if you are a new trader to the channel, let me explain this again. Turn off this. Last time we had, pull up this. Last time we had a simple or bear market start in the market. You saw DXY pump. When we dropped down to the 400 in the triple Qs right here, DXY pumped ahead of time. So let's actually bring up this. And you can see this. The market's pumping. DXY is dropping. See this hook right here in DXY? See this hook right here in the market? So one thing that I do want to point out is the 200 moving average, once again, because I know there's some new viewers probably on this channel. I deleted my moving averages. How? Dude, it is one of those days, not gonna lie. Oops, that's not even the right one. There we go. Oh, and it resetted it. No, that's horrible. Either way, that's a simple moving average. Bear with me. It is the morning, and I worked a 4-day week, and I made videos for you guys. That's not it. That is definitely not it. I thought it was this one. It is that one. Yeah, let's just do the red. I'll fix it later. But either way, let's pull up this. So last time in DXY, we've had the 200 moving average. Last time when we were having the bear market, the market got above the 200 moving average. And then we started getting a really hard push in DXY. Last time when we broke out of the 200 moving average was 2 weeks ago. So if DXY starts to pump back up to around 107, it is going to be a clear sign that a drop is coming in the market. So make sure you're paying attention this coming week. If you start to see DXY, that is not good for you bulls. I'm telling you right now. That is going to be really bad. So just keep an eye on that. So let's actually go over the comments because I kind of want to just point some things out. Thanks for the intro. So tough. I did edit it. That just the music. I actually stole it. So thanks. Couldn't see these stocks holding the market up. Holding stock market up. Keep pushing. I don't have my glasses on, so bear with me too. Couldn't see these stocks that are holding the stock market up keep pushing higher to the 700 on the SP500, and dang, the whole market higher. What kind of crash that you were talking about? Guys, I'm not talking about a crash. I'm talking about just a simple going down to Man, people. Okay, look. We are still in the 2023 bull channel. A crash down to support is not a crash. It's just hitting support. So let's move to the next one. Oh, and this is what I'm talking about too, like HGT, whatever network. So this is what I talk about all the time too. People, when they trade off the news, just news, that is the worst thing you can do. You have to remember Google isn't the market. Google's like 13% with ANC. So if the other companies are going to do bad, that means Google is probably going to do bad eventually in their stock price, and it's going to drop. So stop reading news articles and do your TA. A drop isn't necessarily a bad thing, but I just bought QQ. But when it does drop, I'll buy more. Google hasn't rejected because Google is more of an AI, and AI are the reasons for the reject. Aside from the market crash, I'll be fine. And also, I hate when people predictions because of some past BS. All things don't move the same because of all situations aren't the same. I do not like how traders look at shit and not support. What does that even mean? Google doesn't need support. Even if Google does drop significantly long term, it will bounce back considering my assets and income. Well, I can probably tell you don't do TA. Google, let me explain this. Actually, I need to get off the day chart. Google is only 4% in the SP500. NAS, 8%. Triple Q's, 5%. SPY, 3.8%. If you don't understand Google, let me just bring it up. So here's NVIDIA, here's Amazon, here's Microsoft. I'll just do those two. See how they all work together? Even if Google, some reason, bought out or just made a shit ton of money or is a great company, doesn't matter. All these other companies move together with Google. And if all these other companies start to reject, Google is going to reject hard. So just because you think Google is a good company doesn't mean it's going to have a good stock price, because if we have a recession or anything like that, that means Google is going to drop no matter what. And then you're going to read your news articles and it's going to say, well, Google, this guy did something to the company, or the CEO went for, it's just, they're going to make news. Stop reading news. You think Tesla is going to 388. You're calling some really big pullbacks. But if the Fed announces a 25 cut and Q's erasing money printing on starting December, how do we hit a bear market? I don't see a correction yet, but sorry, I don't think the bear market is on the cards right now. Okay, all right, Jimmy. Well, let's go over this, Jimmy. So, once again, let's pull up the moving averages. Actually, let's do this because I just got done talking about it. So let's do 2025. We have 3% interest, or we have 3% inflation. Reason why is because we are holding rates really high, which makes inflation really low. Well, Trump is trying to cut rates. So what that is going to do, because the market has pushed for 2.5 years with no pullbacks besides this, which is nothing, but has been pushing, that means the economy is growing. That means the GDP is growing with high interest rates. So that means the economy hasn't cooled down. So when you start cutting rates, that means inflation is going to pop really soon. That means CPI is going to, have bad reports, and that's going to start a bear market. Now, if you traded back here, back in 2022, you know what high inflation does to a market. When we started getting really bad inflation reports, you start getting hard rejections in the market. So when we start cutting rates, which, inflation might not pop off tomorrow, might not pop off in December, But in January, February, and March, you need to pay attention, because when that does happen, and say in New Year's, say it takes all the way until December 31st for us to hit support of around 550, 548. If we're sitting on support, and if inflation reports come in bad because we start cutting rates, what that is going to do, it's going to start hitting the support, probably bounce up, and it's probably going to start rejecting off those moving averages, just like this. Just like how we're rejecting off the moving averages. It's not going to be hard to get a bear market. I don't get why people think bear markets are not going to come when we had a bull market for 2.5 years. If you honestly think we're going to have a bull market right after a bull market, especially Trump trying to cut rates, you can't really cut rates when you're having a bull market. Like, if you're planning on having another bull market, that's just dumb. We learned that lesson in 1979. You should definitely go YouTube it. I think that was the last one. That was the old one. Yeah, so those are just some of the comments. If you want to leave a comment, I'll go over it once in a while. But yeah, just wanted to make a video. Thanksgiving, and yeah, happy holidays, eh?